Welcome to the Daily Market Recap, a detailed review of the market structure and the key support and resistance levels in the S&P 500 E-mini. Today is Sunday, October 27th, 2013. This month, S&P futures rallied above their previous multi-year high at 1727. And on Friday, S&P futures auctioned up to a new multi-year high at 1756. Friday's rally was driven by strong earnings in the tech sector and supported by continued speculation that the Fed will continue its quantitative easing into the first quarter of next year. One of the key components of the Follow the Bots quantitative model is the Kalman filter. The Kalman filter has been described as a major algorithm of the 20th century. It is used primarily in all forms of guidance systems to plot direction. Reviewing the forecast in the Kalman filter, we can see that when the S&P broke above the prior multi-year high, the slope of the Kalman filter was exponential as S&P futures auctioned up early in the week to 1754. Following the pullback and the second attempt to extend the trading range above the 1754 price target, when the digital filter turned down for the second time below the new multi-year high, the slope of the Kalman began to descend. On Wednesday, S&P futures pulled back to 1734, 1736 and retested the lows that it had traded down to on Monday. During the consolidation that developed at Wednesday's low, when the S&P auctioned back up above the 1742 price level, the slope of the Kalman ascended as the S&P attempted for a third time to retest the multi-year high. When the S&P pulled back again to Wednesday's close at or near the 740 price level, the Kalman filter indicated the price action had paused and turned flat. The late in the day buying interest resulted in the slope of the Kalman filter once again moving higher. During Friday's session, when the S&P pulled back again to the 742 price level, the slope of the Kalman remained ascending as the market auctioned up to retest the multi-year high at 1754. For a detailed review of the micro intraday developments that occurred during last week, we'll focus our analysis on the point and figure chart. Most importantly, we see the retest of support down at or near the 1736 price level. The key support level, as noted throughout the week, is the prior multi-year high at 1727. Following the retest of Monday's low at 1736, a period of narrow range development occurred into Wednesday's close. Overnight, the S&P retested the high up at or near the 1751, 1752 price level before selling off from the high and pulling back to fill the gap at Wednesday's close. Narrow range development also occurred during Thursday's session. However, the general slope of the trade disbursement continued to point higher. During Friday's session, the minor support level that developed on Thursday at or near 1743, 1744 was retested, and the S&P auctioned back above the overnight high and traded up to the multi-year high at 1754. There was a minor sell response when the S&P initially retested the multi-year high and price sold down to 1747. Narrow range development dominated Friday's late in the day session trade activity, but the trade disbursement continued to be skewed to the upside, and the S&P traded up to 1755 into the close. Coming into Monday's session, minor resistance in the context of Friday's close is located up at or near 1760. The maximum likelihood expectation target, should the rally continue and extend the trading range above the current multi-year high, is located up at 1775. Should the market pull back into Friday's trading range, the key support level is at or near the midpoint of last week's trading range, down at or near Friday's low at 1744. Support rests at last week's low at 1736, with key support located down at 1727. That concludes our daily recap for the S&P 500 E-mini. If you would like to follow our real-time commentary, we invite you to visit us online at www.followthebots.com. Log on and join us some morning at the open.